Hi there, welcome to Kneppy Invest and welcome to another technical update video. I have to get a move on in this video because not only do I want to get through indices, commodities, Bitcoin, bonds, also have 20 individual companies. I'll look at all their charts in today's video for various reasons, some good, some not so good. Now, I just remembered today, early this morning, that tomorrow we have no trading because it is King's birthday in New South Wales, even though some other states are not celebrating a public holiday. New South Wales is the premier state in this country. There's no questions about that because they have a public holiday and the markets are closed. In fact, when other states have a public holiday, the market's not closed. That happens in Queensland all the time. We have a public holiday and the market is open. And to be honest with you, I like that. So don't forget that there is no trading on 10th of June 2024 because New South Wales has a public holiday celebrating the King's birthday. I'm not going to talk about that. I don't think we should be celebrating a King's birthday at all. We'll not be having a public holiday for the King's birthday. Why are we doing that? Anyway, before we get too political or whatever, let's start with looking at the indices. And the XJO had a good week, up 2.1%. Let's confirm that. 2.06%. So I thought it was up a little bit more than that. Now, to be fair, if I did round that up, it would have been 2.1%. We are near the all-time highs, with which, if I remember correctly, was about 7,910. And that was in April, start of April, 7,910.5. So that was about 2 months ago. We did hit the all-time high on the XJO. So not far off that right now, only 50 points. And maybe we'll get that during the week. Even though we only have 4 trading days today, or this week, we still could do it because the markets are still quite volatile. If we do look at the daily chart, in fact, a beautiful 1, 2, 3, 4, 5 days up out of the last 6 after it was like 6 days down out of about 8 or 9. So fairly volatile when you do look at the daily chart here, but the weekly chart shows that we are still pretty strong, to be honest with you, when you're looking at the XJO, which of course is the ASX 200, which includes some of the biggest companies on the ASX, which means some of the more favored investing companies that retailers like to buy. And maybe some of these are considered more defensive. CBA reached a record high this week. I'm not sure why people are buying CBA when the PE ratio is like 22. That's absolutely ridiculous. This is not the time to be buying CBA, but people are still piling their money into companies like that, which is bizarre because you're not going to get much return out of those companies. But again, it could be just that's where they want to put their cash because there's nowhere else, maybe. I don't know. I have no idea why people are buying CBA these prices, even when the CEO says there's not much growth left in the company. Small caps still suffering a little bit. I believe XSO was down. Well, we'll say flat. That's sort of this 1 week candlestick is like a doji, which means it's virtually flat and down a little bit, down at 0.11%. Not quite as bullish when you look at the small odds compared to the XJO, but that's okay. Small caps will have their time in the sun eventually, but maybe not just yet. Now, as we turn attention to the American markets, I have a feeling it's probably fairly similar. The Nasdaq's probably done really well this week. The Russell 2000 may not have done as well. And let's see if that has played out. Now, Nasdaq down 0.11% on Friday. The Russell 2000 down 1.12%. So small caps had a horrible day on Friday. Dow Jones only down 0.22%. So let's have a look at these charts, weekly candlesticks for these indices. And the Nasdaq is up. Did it beat 2.06%? Oh, easily. Up 2.5%. Also reached a record high during the week. And this is a fairly bullish looking chart. Everyone loves the Nasdaq right now. The NDQ, for those who invested heavily into the Nasdaq ETF, which I believe has a ticker code NDQ as well, you're probably enjoying life right now. If you have no money in investments right now, either equities, property, or anything, maybe paintings or literature or art, I have no idea, or maybe baseball cards, you're not enjoying life right now because your wages aren't going up all that much, inflation's there, and you're not enjoying life. Those who are invested in stuff like individual companies are probably enjoying life right now because your wealth is increasing at a greater rate than inflation. That's why you should be invested, to maintain your purchasing power or maintain your capital. Anyway, I'm going on tangent right now. Nasdaq up, but I have a feeling Russell 2000. I'm going to try to guess here. Based off Friday, because it was down 1.12%, and I can't even remember what happened during the rest of the week, I'm going to say Russell 2000, and because the small caps ASX was down, the XSO, I'm going to say Russell 2000 was down 0.4%. Oh, it was actually down by more than that. Geez. Down 2%. Wow, there you go. You can just see the bifurcation, what that word is called. Bifurcation. I'm pretty sure I'm using that word right. Bifurcation. Bifurcate. Divide into two branches or forks. Divide it into two branches or fork. Yeah, that's... here's a nice one. Cambridge Dictionary says to divide in two parts. A sample of water was taken from a point where the river bifurcates, separates. So maybe it's not the best use of the word, but there's probably another word out there I could use. But you could just see how the Nasdaq, the biggest companies, the best quality companies, up over 2%. The Russell 2000, small companies in America down 2.5%. And compare this particular chart to the Nasdaq, and you can see there is a different opinion about these sort of investments, and people are more willing to buy higher quality, more expensive companies. And to be honest with you, I can't blame them. Many companies in the Russell 2000 probably not profitable, or they're not growing all too much. Dow Jones. Let's have a look. Let's have a guess of the Dow Jones. So Nasdaq up 2.5. Small caps, or the Russell 2000 down, was it 2.1%? I'm going to say this is in between. I'm going to say the Dow Jones was up maybe 0.2%, sort of in between. Let's have a look. Okay, it was up slightly. It was up 0.29%, so not far off. And of course, this is a much better looking chart than the Russell 2000, but not quite as good as the Nasdaq. And I'll probably also assume, wonder if there's an X Magnificent 7 Nasdaq chart I could look at. That would be really interesting to see how the Nasdaq minus those 7 companies has been doing. I'd say it's probably a little bit more bearish than Nasdaq and more like, possibly more like the Dow Jones Industrial Average. Okay, so that's the American markets. Now let's have a look at Nikkei. Nikkei was flat and just below the important, we'll call it resistance level because it's still below it. And Nikkei was up slightly, according to this, up 0.51%. And what about some of the other international markets like the DAX? DAX flat, or just up slightly, 0.32%. The FTSE down 1%. Hang Seng 500 Connect down, no, flat, up 0.52%. Okay, so that's the indices, and overall, it all depends on what you're invested in. Yeah, it all depends on what you are invested in. If you're heavily invested in the Magnificent 7, more than likely you've done well. And I am invested heavily in the Magnificent 7. And yeah, my portfolio is doing well. Okay, so let's have a look at commodities. And I'm assuming commodities had a pretty bad week. I'm making an assumption based off things that have happened during the week. And if we have a look at the different sectors, just have a look at the week that was. Staples, financials, discretionary, healthcare have had a really good day or really good week. Materials only up 0.38%. IT didn't have a good week, and energy was negative as well. So most sectors had a good week, and I actually thought maybe mining had a worse week than that. Let's look at the indices. Gold up 4.88%. There you go. And ASX 200 Resources is up 0.2%. Let's just expand the indices. And we'll have to look at the weekly. And emerging companies, which is probably a more kin to the Russell 2000, has had a really bad week, down 1.65%. Energy, little bit negative. But resources, not as bad as I thought it would have. Because as I'm thinking about most of the commodities, they had a bad week, and a lot of mining companies on the ASX, I would have thought had a bad week as well. So I might be a little bit mistaken. So let's focus our attention to commodities right now, and let's go to gold first. And maybe because gold had a lot of these commodities had a really bad Friday, and gold was down for the week, down 1.4%. Let's have a look at the daily charts. Yeah, and it was all because of Friday. So that sort of makes sense. So Friday was down 3.45%. And other than the Friday, gold actually didn't have a bad week. It would have been up. So I have a feeling that gold companies on the ASX will have a really bad day on Tuesday, unless gold rallies on Monday. So maybe that will help some of the mining companies, particularly if gold does rally. And gold's getting to a really important point. If you do look at linger on the daily chart, we don't want it to get below those lows we saw back in May, start of May. We're not far off that right now. Let's go back to some other commodities. Uranium down for the week, down 2.7%. I'm pretty sure it was above $90 recently. Now it's below. Maybe even at the start of the week it was below or above 90. Let's have a look. Yeah, no, it was 89.75 at the start of the week. Copper, I'm pretty sure this had a bad week. Yeah, copper's had 3 bad weeks in a row, down another 2.57%. And I have a feeling copper had a really bad Friday as well. Yeah, copper had a bad Friday after 2 nice days, and this is starting to look a little bit more bearish. Not completely bearish right now, but copper's had a few really bad days in the past, well, since the 22nd of May, when it was down 5%. That was sort of maybe the first sign of some weakness in the copper market, and it sort of continued to now. Nickel, actually go back to the weekly charts for nickel. Nickel down 6.65% for the week. It's probably why Centurus Metals was down big. What's other companies do we have with nickel? Nickel Industries, I suppose. There's probably a few others, but I can't remember right now. So nickel, a fairly negative week. Oil, I'm pretty sure this had a negative week as well. So you can see why I'm maybe a little bit confused why mining didn't have a bad week. And I think it's because of Friday. Friday was a pretty bad day for mining. And this was Friday American time, so Friday night our time. So I don't think we have seen that sold off because of that Friday or that session. And because we're not open Monday, there is potential mining won't have a bad day. But anyway, oil down 2.3%. And this is fairly negative. The chart for oil is negative. Actually, nice little bounce on Wednesday and Thursday, but still looking negative. That could be just a little bit of a rally of oversold rally. Silver, I'm pretty sure had a really bad week. Friday down 6.14%. This is a lot of volatility in some of these commodities, and silver is a beautiful example. Still in an uptrend, so I'm not calling the end of the uptrend yet for silver, but a really bad week, and 2 or 3 bad weeks in a row, or 3 down weeks, not bad weeks. So copper overall down 3.3%. Would have been up if it wasn't for the Friday session. Yeah, so silver actually did rally on Thursday, up 4.3%. What else can we look at? What about me? It isn't fair. Coal down, I'm pretty sure. Yep, coal down. I'm pretty sure they had a really bad day during the week. Down 7.6%. There you go. Yeah, that I was liking the look of this chart. Maybe this is just a little bit of weakness, but I would like to see a nice little rally in coal over the next week or so, because it was looking promising, not so promising right now. Gas. Oh, gas, there we go. Maybe the place to be is gas. Gas is up 12.96% for the week. Yeah, it looked really good there. Ooh, nice little rally, nice little dip, and it's going back into a rally. What else? Iron ore, pretty sure iron ore's had a pretty negative week. So this is the daily chart, and we had a really bad down day on the Monday, down 4.7%. So I have a feeling iron ore is down big. Yeah, it was down 6.19% for the week. Now, the new week has started, by the way. New week has started. It's already down for the new week, down 0.55%. And when you look at the weekly chart for iron ore, a lot of volatility in there, but the volatility is starting to close up. You can see the peaks keep going lower, but the bottoms sort of keep getting higher. Or not, yeah, sort of. So there's a bit of a squeeze in the volatility. And I have a feeling, lithium, market doesn't care about lithium right now. Still, I think definitely there could be an argument the bottom has been reached for lithium, but we want to see a little bit more strength in that sector. And palladium, let's have a look at palladium. And palladium flat, down at 0.47%. And yeah, flat for palladium, but still in a downtrend. And cocoa. Oh, cocoa looks really good. Let's put all our money into cocoa. And tin. Oh, tin. Tin's had a nice little bounce the last 2 days. So tin's a little bit different. Don't know why. But overall, tin was actually down. So nice little bounce in the last 2 days. So it has helped their week. But and you can see a nice little shadow below the main body, which tells us there's a little bit of buying in tin. So tin's had an okay week. So tin, Metals X. Maybe some of the other companies on the ASX. In fact, tin, I'm going to do that right now. Tin ASX. So probably Metals X, maybe South 32. Here we go. By market cap. Mineral Resources, I'm not sure about that. AVZ Minerals, that should be there. And Metals X. A few other lithium companies. So I forget about them. But Metals X, when I think tin, I just think Metals X for some reason. And looks like that's it. Does Mineral Resources really do tin? Yeah, I don't know about that. I just think Metals X. Okay, so that's it for the commodities. Now let's turn our attention to Bitcoin and the bonds. And bonds, not the bonds, bonds. Now, according to this, Bitcoin is flat today. So did Bitcoin have a good week? Actually, Bitcoin had a good week. Bitcoin was up 2.27%. Daily chart, still trading in a range. And no, I'd love to see Bitcoin get above 74,000. That would be a bullish move. Well, Ethereum, fairly similar to Bitcoin, it was actually down for the week. Down 2.6%. So a little bit difference between Bitcoin and Ethereum. I just looked at the last 2 days and they were fairly similar. But Ethereum a little bit more weaker than Bitcoin was down during the week. But that's okay. And if I had to choose between Ethereum and Bitcoin, I'd always choose Bitcoin. That's just me. And bonds. Let's turn our attention to bonds. Focus on the US 30 years. Up 2.7% in the last day. And I'm pretty sure that's probably the Friday. Yeah, Friday. And yeah, overall, actually, in the week, it was down, wasn't it? So down 2%. But again, just like one of those commodities, there's a nice little shallow behind or below the main body, which tell us there's been a bit of buying during the week. So that's a little bit of strength in US 30-year bond yields. And you can see that with the daily chart. So 5 down days in a row, found some support on the 6th of June, was up a little bit and then rallied nicely on the Friday, up 2.7%. So we found some support, I suppose you could call it, for bonds at around about 4.45%, up to 4.557% right now. And that's all I'm going to talk about when it comes to bonds and Bitcoin. Now let's get to the 20 individual companies I'm going to focus on for various reasons, not only one reason. The whole point of me doing these videos, or even this channel, is to share ideas with you. So here are 20 possible ideas for you. You may hate every single one of these ideas, but that's okay. At least the way I look at it, if one person out there, excuse me, just about a cough, if one person out there, just one person, finds a good idea in today's video that verifies or justifies me recording this video, that's the way I look at it. One person, all I need is one person to find an idea. Now, even if one person doesn't find an idea, I have found plenty of ideas from you, the viewer, And that makes this channel worthwhile for me because I also find ideas. So if you have an idea for me, just leave in the comment section of this video. Okay, let's start off with Karoon. Karoon's chart looks ugly, doesn't it? Looks pretty ugly, but I've got this orange or this purple, it's not orange, this purple box. That's an area of support. But Karoon has fallen through that. So I am keeping an eye on Karoon. If I had to choose an energy company, like an oil and gas company, I probably would choose Karoon. Now, I consider Santos and Woodside, two companies that are in the ASX 20, to be one or, if not the two lowest quality companies on the or in the ASX 20, maybe just ahead of Telstra, but definitely not long-term buys. Now, Karoon has the potential to be more of a buy in at least the medium to possibly in the long term, because I do think they have more room to grow. I did notice the P ratio of Karoon is something like 2 or 3. So the market is a little bit bearish about this company. P ratio of 2.85. They've made an acquisition into the Gulf of Mexico, and I like that. I do like that acquisition. But with the weakness in oil prices, Karoon Energy is looking weak, and it's fallen through this support level. So let's have a look at the weekly chart for Karoon. So it's fallen through the lows. The reason that's a support level is back in September 2022 and also in January this year, Karoon actually did fall to this level, this zone, this purple zone, and we saw the share price of Karoon rally after that. Now it's fallen straight through, which tells me a lot of weakness in this company. In fact, in the past week, Karoon price has fallen 6.1%. So the next area of support for this company is the lows we saw back in July 2022. That's around $1.50. Overall, if you look at the weekly chart, the share price was in a beautiful uptrend. Now we are starting to see a little bit weak. The last high was below the previous high before that. And so this sort of looks like almost a head and shoulders, So that's sort of like a pattern, a sort of a bearish pattern. So this could be on the radar for maybe some value investors who are not biased against mining companies just because of that PE ratio. But again, this is a mining company. And if oil prices continue to fall, which I don't know why they would fall all that much because of OPEC, who knows? Maybe Karoon Energy could fall another 20, 30% from here. Could even fall further. But overall, maybe this could be a good value buy for someone out there who wants this sort of company in their portfolio. You can buy this company now for $1.70. And not long ago, the share price was $2.40. That's Karoon. Kogan. Okay, it's pretty easy to see why I've got Kogan on this list. Share price has absolutely taken a hit over the past month or so. In fact, the share price has halved. Oh, not quite halved. Oh, I was going to say it has halved. Share price reached almost $8.80 back in March. Not that long ago. We're talking about 3 months ago. Share price of Kogan was $8.80. Now it's $4.40. So that's halved. Well, it's not quite, because the high was actually $8.73. So we're doing semantics here, saying it's halved when it hasn't exactly halved. But it's halved. Yeah, it's halved. We'll say it's halved. Nice little rally on the share price on the Friday, up 2.8%. But why am I talking about Kogan? Chart looks pretty horrid. Nice, fairly strong shift in sentiment from positive to negative. And it would have been around something released on the 24th of April. That could have been a trading update down 27.5%. That's a big down day. And that negative sentiment has continued to today. However, it's saying that the last two lows we saw in this company's share price, October 2023 and January 2024, were in this area, this zone. So this should be a support zone. And maybe that's why we have seen a little bit of buying coming in on Friday, the last trading day of the week. If we go back to the weekly chart, and there is a low a little bit further down, about $2.73. That was a low back in July 2022. So that would be the next support level for Kogan. So I'd say this company is oversold right now, and maybe not in the oversold section, but very close to the bottom. So let's have a look at the relative strength index. Yes, in fact, it's still in it. It's just crept above that overzone area. It was oversold. On that day, it fell 27%. But because the negative sentiment, who cares? This is one of the reasons I don't really rely on RSI all that much. You can sort of tell this is oversold because some people would have said, oh, this is oversold on the 26th of April, and they would have bought in about $5 or so, $5.10, and it just kept on falling. So you just can't look at the RSI or any sort of overbought, oversold indicator and think this is a buy or a sell based off that. Here is a good example. It was overbought on the 26th of April. Share price rallied 23.7% on that day and kept on climbing. Anyway, so that's why I have included Kogan in this particular list. It's because, it's in the support area. On the flip side, AUB Group, I do have a position in this company, and this is a company whose share price is now in a resistance zone. So complete opposite to Kogan. It's fairly obvious why this is a resistance zone. This is a daily chart. Share price of this company got to this zone, which is between about $31.50 and $32. First got to this zone in September last year. And I'm pretty sure before that, all-time high. And then share price pulled back, rallied again in February this year, got into this zone again, and then pulled back. Got into the zone again in May, then pulled back, and now it's in the zone again. So 3 times in the past, it's failed to get out of the zone, above the zone, and now it's in the zone again. Wouldn't be surprised to see it struggle again, but if it pulls through the zone, gets above $32 on a strength, that would be a breakout for AUB Group. Now, again, I do own this company in my portfolio, my quality portfolio, and this is an insurance broking company. If I had to compare insurance broking company to insurances, I would choose insurance broking companies every day of the week. I would never invest in insurance companies. Now, another little thing I look for is buy the dip possibilities. So I'm going to show you 2 buy the dip possibilities here. First one is Acrow. So Acrow, this is a daily chart, has been in a beautiful uptrend since really about September 2022. So for the past 21 months, share price back then was about 52 cents. So share price and valuation of this company has doubled. But let's go back there. Maybe it'd be even longer. A little bit of volatility here, but in fact, I'd say the share price, this company's share price has been in an uptrend since probably June 2021. So the last 3 years, share price then was about 36 cents coming out of COVID-19. And if you just ignore prior to June 2022, the last few times share price has gone into the longer term moving average channel, which with this solid blue line in it, which is a 150-day moving average, or probably the best way to say that, 150 period moving average. So this is a daily chart, so it's 150 day. If I was looking at the weekly chart, it'd be the 150 week moving average. But it hasn't hit this zone all that often in the past 2 years. The last time was back in June of last year. In fact, almost 1 year ago, it got into this zone, and that was the time to buy. So possibly we are seeing a very similar happening with scenario, that's a better word, scenario with Acrow right now. It's just got into this zone. Possible buy the dip for Acrow Limited. Don't even think this company would be looking that expensive. P ratio 12.34. Dividend yield of 5.1%. So this company just keeps hitting it out of the park, it seems like, in financial performance. Yeah. Anyway, so this is an opportunity maybe to buy on the dip for Acrow, just like the next company, Doug Technology. Now, I don't own Acrow. I do own Doug, and there's me buying. I foolishly took profits in March when the share price was about 250. Share price is now 249. So I'm thinking, ooh, maybe I can correct that mistake. Maybe it's not a mistake if the share price keeps falling from here. Maybe that was a good thing. But if I do buy some shares in Doug on this buy the dip situation, thinking I can correct that mistake, and the share price keeps falling, that would be doubling on my mistake in a way. But it's okay. I've got a longer term position in this company. So this was an original trade bought here. So I was a little bit late to this trade. Share price broke out in January 2023, just above 60 cents. So I bought it at 83 cents. So you don't have to get the timing perfectly. And this is a beautiful chart. It's beautiful. We have seen now twice the share price get into the longer term moving average channel with that solid blue line, which is the 150-day moving average. It got into that area, and both occasions it only fell into the area for 1 day, even less than 1 day. In fact, we'll say less than 1 day because the shadow got into the area, not the main body. So we'll say less than 1 day. First in November last year, and then again when they released their results in February this year. And the share price of Dark is right in that zone right now. It's just touched the zone on the Friday session. In fact, the share price has fallen from $3.10 to $2.49. So share price has fallen 70 cents, 3.10. So it's well over 25%, isn't it? So it's about 30% in the past month. It reached its high on the 7th of May. So over the past month, share price of this company has fallen about 30%. So possible buy the dip situation for Doug Technology. It's not a person, it's a company, Doug. So 2 buy the dip situations. Now, next company is another company I do own. I bought $1.86 back in January. Someone actually did question me, why am I buying a company that is liquidly traded? I have mentioned in the past that I'd prefer not to trade companies that are liquidly traded. So this company might be more of a longer term play. The reason I bought Shape is twofold. Chart's starting to look good. This is a breakout. See similar patterns time and time over again. When a company lists on the ASX, or maybe any index, you do tend to find a little bit of weakness in the share price. I see this a lot. So it listed back in late 2021, share price fell from about $2.30 all the way down to $1.35. Now, one thing you'll notice, during the time period where the share price was falling, no volume, very little volume. And then the share price started to turn. We also started to see volume increase. Share price broke out around about late last year, and share price has kept on going up. Now, it is illiquidly traded, but the liquidity is improving. The reason I say that is the volume is starting to expand, and you get a better indication of the expanding volume by looking at the weekly chart. So let's have a look at the weekly chart right now. You can definitely see it. No volume as the share price has fallen. And we started to see increasing volume, in fact, in August last year. So they must have released their results. And some people in the market, institutions or individual investors, like their results, started getting interested in this company. And we started to see the volume expand. And it has expanded and expanded, sort of reached a peak in March. But the volume, even though we haven't seen a weekly volume get above what we saw in March, the volume has remained significantly higher than what we saw during the downtrend period in 2022 and the first half of 2023. So we are starting to see expanding volume. So institutions are excited about this company. They maybe done some research on Shape Australia and went, there's some value in this company right now. And if you looked at last week, we did see some buying. So down 0.9% for the week, but you can see that 1 week candlestick, there was a really long tail below the main body, which tells us it was buying. We've seen that a few times now in this uptrend where we have seen long bodies below their main body, which tell us there is buying coming in whenever someone sells on market. I think that's what happened during the week for Shape Australia. Share price fell big on the 3rd of June, the Monday, fell 5.4%. I had a look on that day, and there was one person selling, just dumped on market, sold on market, that because of the illiquidity problems or the liquidity problems, if you do dump on market, the share price can fall a fair bit. But the other thing to notice is if you look at the daily chart here, the share price fell into the shorter term moving average channel and took off again. So I do like this company, the chart, and also the valuation. So P ratio 14.46, this company's growing, and dividend yield is 6.5%. And if you look at the last 3 years, the revenue has grown from almost 600 million to just under 900 million, and low margins. I have to give you that. This company does have low margins. Is probably the one concern I have. But the reason I'm trading this, I don't consider this company a high quality company. More than likely, I'll never consider this company high quality. So it's more just playing. In fact, there is a nice little trend going on. and increase or expansion in volume. It's telling me there are people interested in the market around this company. Now, IGO, I don't own, but this is an example of a company that is trading just above a support level. That support level is just under $7. It recently hit that $7 level on the 22nd of January. So we are talking about 5 months ago, and it has hit this support level. Let's have a look after that. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. And it has not gone below it. Maybe briefly it's gone below it on one of those days, but very briefly. So it seems like $7 or just under $7 is a fairly important support level for IGO, which I'm pretty sure is a lithium miner. Do they mine? I'm pretty sure they mine other than lithium. Let's have a look. Nickel, copper, cobalt, and lithium. There we go. Nickel. So I'm pretty sure one of the reasons why the share price has fallen a fair bit for IGO is because of weakness in lithium. So let's have a look at the weekly chart. How far back does this support level go? In fact, it all goes all the way back to pre-COVID-19, where the share price of this company was rallying, got to a share price of just below $7 back in January 2020, and then fell. So that immediately, because it fell a fair bit during the COVID-19 financial panic, that was a resistance level. Share price rallied to that level. You can see share price going above and below, sort of oscillating above and below that support level for about 2 months. And finally, it broke above it. And we can confirm it broke above it probably around about the 22nd of April, 2021. It then tested. It retreated. The share price retreated and tested that level on the 15th and the 21st of June. Then took off. Look at it go. It takes off. And now, in fact, you can see in the weekly chart, it keeps testing it over and over again. Doesn't mean that level is stronger. I think that means it keeps testing it. It just weakens it. Over time, it just weakens and weakens and weakens. And I wouldn't be surprised to see IGO fall below this level. But maybe this is the low for IGO. But if it does fall below, that would be very bearish. Okay, so next one is a company that has been in a beautiful uptrend, but we have seen a little bit of weakness in the past week. They released some sort of announcement on the Monday. Share price fell 14%. This is really interesting because I went to Hot Copper before market opened, and they're all giving themselves high fives. Oh, this is awesome. This is the great. It must have been some sort of results in regards to niobium or neobium. So all the holders were giving each other high fives. We're all going to retire rich. These are awesome results. There was one poster who said, these aren't that great results. And he was lambasted. He was pillaged by the other posters saying, oh, you're being stupid. You're dumb. You're a, what do they call them? You're a troll, that sort of thing. And the share price on that day fell 14%. So who was right in the end? Not only that, the share price has continued to fall. So it was a bad week for WA1 Resources, down, I'm going to say 25%. Let's have a look. Down 22.8%. Now, was this the worst week this company has had? Probably, in terms of percentage change. So you don't ignore what the market says about an announcement. So the market said this was a bad announcement. Maybe not a bad, but it was maybe a disappointing announcement. And not only that, I went back to Hot Copper and they're all expecting a bounce. Oh, this is oversold, etc. And we've had 4 down days in a row after that initial day. So each day has been down from the previous one. So now down to $16.37. And it has fallen a fair bit from the highs we saw. Not quite 33%, but it's getting close to that. Now, could this be one of those situations we have seen in the past? So we saw a lot of weakness in this company's share price in January. Share price fell from about $15 down to below 10, and then the share price rallied again. So this could be one of those buy the dip situations for WA1 Resources. Okay, next one is Nine Entertainment. Why the hell have I included Nine Entertainment? Well, this is the definition of a bad trend. This is the definition of a company trading in a range. So here it is. This is the daily chart. So Nine Entertainment was trading in a range for about almost 2 years, not quite 2 years. The top of the range was about $2.20. The bottom of the range was roughly $1.80. And you can see whenever the share price of Nine Entertainment Group got to the top of this range, happened 4 times, it was sold off. And where the share price of Nine Entertainment Group got to the bottom of the range, we saw some buying. Happened about 4 times. It's not absolute, so it's more of a zone, not an absolute share price. But what happened on the 22nd of February? So the company released their results. Share price fell 8.7%, and that was the breakout. Now, it was a bad breakout because it went below the bottom of the range. And what happened the days after that? So share price sold off on that day 8.7%. So there would have been shareholders who saw the share price get to $1.68 and went, oh, there's great value in Nine Entertainment Group. Oh, I can't believe the share price is down 8% today at $1.68. I just remember a few months ago, the share price got as high as $2.20. I just have to buy this company. It's cheap now at $1.68. So we saw a bit of buying coming in, and the share price rallied. And what price did the share price rally to? Perfect technical analysis, perfect resistance support here. Share price rallied to the bottom of the trading range. Absolutely perfect. Then it hit it. And then we saw selling coming in. In fact, the day after it hit it, the share price of this company fell 4.44% on that day. And then the next day fell another 2.33% on huge volume, really big volume coming in on those days. That was sort of confirmation that this was a bad breakout to below the bottom of the trading range. And the share price has continued to fall since then. We have seen 2 rallies after that. So there's another little rally into the short 2 moving average channel, then fell away. Another rally into the short 2 moving average channel, and the share price has continued to fall. So right now, those who bought $1.68 are going, why does the share price keep on falling? It's so cheap. It's so cheap. They're probably not thinking that. They're probably thinking this is a dog stock. Share price has fallen significantly since I bought it. This company is a dog stock. But that was a dead giveaway. When they released the results and share price fell like that, instant sell if I was holding this company. But there's no reason to be holding this company at all. Anyway, let's have a look at the weekly chart for Nine Entertainment Group. In fact, last night's share price was this low, was way back in 2020. This, in fact, if you just draw a line right now, right there, so let's just ignore the really depths of the COVID-19 financial panic. We can see the share price of this company hit a low in 2019 at about $1.35. And then it ran sort of, that was a really good, important support level just after, we'll say in June through August of 2020. Share price remained just above that level, but tested it time and time again. About 5 or 6 times it tested it. And the share price is moving towards that level. It's only 7 cents off that level. So this could be, this is why sometimes I like to have a look at the longer view, like a weekly chart. This just shows you that there could be a nice little support level, support zone for this company. So let's put a little rectangle in this area. So it's moving towards a support zone right now. Let's make it like that. We'll make it like that. There we go. So Nine Entertainment Group is moving to support level. I'm not the biggest fan of these type of companies, but just because I'm not a fan doesn't mean you don't have to be. But this could be just maybe a value play. Says PE ratio is 23.9. Dividend yield 6.4. I'm not sure if I believe the PE ratio of 23.9. So last year the profit was 300 million. This year or last year was 181. Semi-annual. Oh, they had 1 half year where they lost. So almost $100 million of profit in the last half year. So if you just extrapolate $200 million of profit for the year, market cap is 2.23. So trading on a PE ratio potentially of just above 10. All right, so Incitec Pivot. So Nine Entertainment Group looks weak. On the flip side, Incitec Pivot looks actually okay if you look at the daily chart. It looks like maybe sentiment is starting to shift. And just have a look. Share price rallied for this company into the long-term moving average channel in September last year, pulled back, rallied into the zone in March and pulled back, rallied again in May, but didn't pull back. It went higher. So it looks like the sentiment and the trend in this company is changing. They must have released something positive, if I remember correctly, in May, 16th of May. This chart doesn't look that bad. I'm not the biggest fan of the company, definitely not a high quality company, but the chart's starting to look okay. It says PE ratio is 100. Yeah, that's probably because they lost some money one of the years or something. Let's have a look at the semi-annual. Yeah, they had a loss last half year of 148 million. The previous 2 half years, they had big profits. In fact, the last 4 half years, they had big profits. So if you just have a look at sort of a normal half year for this company, I'd say full year profits will be 600 million and the market cap is 5.81 billion. So you could actually argue P ratio or the valuation of the company is fairly low. I haven't had a longer term view of this company. I'm just not the biggest fan. Not the biggest fan of this company in terms of quality, but trading, yes, I would buy this company. Now, if you look at the weekly chart, you do get a different perspective. And I think this is probably a really good indication this company is not high quality. It's just by looking at the weekly chart, it's just done nothing, hasn't it? This goes back all the way to 2011. It's done nothing over a 13-year period. High quality company wouldn't look like this. Yeah, so definitely not a high quality company, but I still would trade, definitely trade. Look at this. So there's periods of time when the share price of this company has rallied and rallied really nice. And maybe we are moving into one of those times for Incitec Pivot. Now, a couple of companies where it does look like maybe the trend is starting to shift more negative. I did set out of both of these companies, the next 2 companies. The other company I have not sold off of because I've never owned it. But someone did actually ask me about did ask me about Monash IVF. But let's start off with this company. So this is the daily chart. So beautiful uptrend, really developed at the start of 2023. So you could have held this company for the last 15, 16 months and done really well. So you could have bought this company at $1 and got a 50% return out of it if you timed it well. But beautiful uptrend in Monash IVF Group. But look what's happened in the past month. We definitely see some weakness. So I would actually say, now what I'll do is put a little rectangle there, here. So what I would have done with this company is, you can see the share price was struggling to get above and below this rectangle. Definitely below it. Many times we saw the share price get to the bottom of this rectangle or this trading zone and rally, not rally much, but remain above it. And same thing could be said at the top of this range. And then we saw the share price get to below the bottom range on the 24th of May, and we saw a little bit of a rally, but the rally was weak. The rally was really weak. And then it started to go down again and then broke through the bottom of the range on Tuesday, 4th of June, and it's continued to fall. So this looks like a potential shift in sentiment and the trend for Monash IVF Group. So this company had been on my radar for a long time. I just never bought a trading position in this company. So there's a lot of trading possibilities out there, by the way, a lot of them. So you don't have to take advantage of every single one. This is one I didn't take advantage of, but I still could have got a 50% return if I did that over a 1-year period. Bravura is another one. So I had been trading this. There's me trading this a few times in the past year. 2 successful trades. Then I sold out at $1.25 recently. Was it about a month ago? Yeah, about a month ago. I wasn't sure about this trade. I was like, oh, I'm not sure. Not sure about selling out of this. Am I being a little bit too impatient? But right now I'm glad I did sell out of Bravura because the share price has fallen from $1.25 to $1.03. Now, in saying that, just by looking at this chart, I wouldn't be surprised to see $1 be a really important support level for this company. Now, the reason I say that is twofold. Just before their results they released on 20th of February, share price on that day rose 30%. Now, before that, share price was trying to get above $1 and was not successful. So $1 is a support level for this company. You could also say, particularly for those fill the gap in or traders who believe that every gap must be filled, this is an occasion where maybe the gap will be filled. And I wouldn't be surprised to see share price of this company hit $1 or just get above $1 and then rally. So I am going to put this company onto my bye-bye Australian watch list, which is a watch list where I do look at companies' charts more often. I hadn't actually had a look at Bravura's chart for a while. Now, the other thing to take a notice, we have seen some heightened volume coming in the last 3 trading days, but the big volume was on the Wednesday when the share price was $8. And the volume remained high the next 2 days and the share price fell, which means there is still supply of shares on the market. So possibly we won't see support at $1. Maybe the share price will fall below $1. Remains to be seen. But I'm going to be very interested in Bravura the next few days, and it wouldn't be surprised to see a nice bounce off $1, particularly because all those gains from their half-year results or full-year results they released in February have been lost. Share price back to $1. And Siteminder. And by the way, the whole point of this was change in trend, wasn't it? So nice uptrend, and looks like the trend has maybe changing. So definitely not an uptrend right now. But if we see the share price continue to fall, or even if we see the share price rally to say $1.20, share price is still in the downtrend, by the way, but that's just sort of I wouldn't say a dead cat bounce, but that is a bounce off support level. And I have seen this time and time again. So if I did take a trading position in this company, and if I saw the share price rally to $1.20, I probably would take my profits at that level. Now to Siteminder, another shift in trend possibility. So a nice little trend developing, short-term trend. It really started on the 28th of July last year. Share price on that day rose 21.5%, and the share price did move into an uptrend. Nice little buy the dip situation back in October, and the share price has remained strong since then until now. So definitely a shift in sentiment and a trend in the share price in the past month or so. Last time share price was this low was back in November last year. So it looks like another shift in sentiment and trend in the share price for Siteminder. If you look at the weekly chart, by the way, hasn't been around too long. I don't see anything in this chart. Bad week though, down 8.7% for Siteminder. Now on the flip side, even though I don't really like Bravura, Siteminder or Monash IVF charts, possibly except for Bravura, possible possible support level bounce, I do like the chart of ERoad. I do like this chart. Again, illiquidly traded, but the company did release a positive announcement on the 23rd of May. In fact, the share price the next day fell to 80 cents. So they released that announcement, share price was 85 cents. Share price the next day fell to 80 cents. And then we saw some really good buying coming in. And the next day, the buying came in, and the share price has risen to as high as $1. So $1, again, rears its ugly head. Round numbers, rears its ugly head. So let's put a line right at $1. So it had struggled getting above $1 back in December. It got above briefly and then fell away. And it got to $1 on the 30th of May and then fell away. But the selling wasn't that strong. Very low volume on the 2 down days. When I say low volume, I mean really low volume. And then we started to see share price starting to go up again. So if ERoad share price get above $1, I would be highly bullish on this company. And I have taken a position in this company because I think there is a chance, based off their positive announcement, and I think the more times the share price of a company reaches a level, the weaker that level becomes. I've seen that with 10 cents time and time again. The more the share price tests it, the less selling there is, because, to be honest with you, there's less supply of shares on the market, because those who have this predilection to sell at 10 cents have gone from the system. The same with ERoad. For those who want to sell at $1, probably they've already sold out, or there's less of them anyway. So put that on your radar. ERoad. Probably not for everyone, but this, I wouldn't say this was a darling of the ASX. The share price of this company goes high as $5.40 in July 2021. And I think I wouldn't compare this to Gentrack, even to integrated research, but have a look at the charts for Gentrack back from 2018 through to 2022. Not quite similar, but on the same path. Now, I would say Gentrack is a much better company than ERoad. Gentrack did prove themselves. ERoad definitely hasn't proved themselves, but ERoad did release their announcement that did get not mixed. I didn't get excited by it, but I did think, this could be the announcement that shifts sentiment in the company. So ERoad achieves positive free cash flow in financial year 24. That's a very important inflection point. Positive free cash flow. All right, next company on the list. Oh, Acusensus. Oh, okay. So I did a grade my trade. So I bought at 72.5 cents, expecting a bounce. This is sort of like the Bravura. So there's a nice little support level for this company at 72.5 cents. The company releases something. No, they didn't lose a contract. They just didn't win a contract. And I thought, why did the share price fall 33% on the news? The company didn't win a contract. So that's showing to me the market expected the company to win a contract. Why would you expect a company to win a contract? Now, Acusensus has no moat. What they're doing is being done by a lot of companies throughout the world. But I still expected a bounce, and we saw the bounce. But then the company released another negative announcement on the 4th of March, just after that first one. Share price on that day fell 16.7%. That was an automatic sell. So I sold the next day at about 70 cents. And I've been keeping an eye on the movement of the share price because I just want to see, was that a good thing to do? And I think it was, because the share price hasn't really been higher than that. It briefly got above 70 cents and now is at 57 cents and at a long-term high, if not an all-time, not a long-term, not a high, low, an all-time low for the company, 57 cents. And in fact, the share price fell 5%. So not a lot of interest in the market for this company. And I would never describe this company as high quality. No way, Jose. Okay, so the next three companies is to do with volume. Three small cap companies who have started to see expanding volume. So one of the things I do look for is expanding volume and trying to pay more attention to expanding volume. So the next three companies, Control Bionics, Xpon, and Energy something. So CBL, XPN, EGI have seen expanded volume the last few months. So let's start off with Control Bionics. I actually did have a look at this company and what they do, and I was like, whoa, this company sounds really interesting. So they're making stuff for disabled people. So someone who can't speak. I think it's like motor neuron disease, which is that ASL? Or I forget what it's called. Anyway, so people who can't speak, and the technology is, I think what they're creating is a technology where it gives a voice to those who can't speak. And that's exciting in itself. Maybe I should get one so people can just hear my thoughts, which is disturbing. I'm not sure if that's what it does. It takes people's thoughts and put them to a voice or something. I don't know. Haven't taken that deep of a dive. But the main reason I looked at what this company does is because we have seen some really good volume coming in the past month. So when this company was in a long-term downtrend, there was some really good volume coming in June 2022, and that volume just died away fairly quickly. So we need to see, I think, continued some good volume coming in, and I really like to see some really good announcements from the company. So expanding volume, a good announcement from the company, particularly a financial announcement from the company, and we will see the trend in the share price go from negative to positive, the sentiment shift from negative to positive. Now, another good thing, share price going sideways. It's been going sideways for about 6 months. Now, last time we saw expanded volume, the share price wasn't consolidating. It was in a long-term downtrend. In fact, it fell significantly. So I probably would not have even taken a second look at this company back then, but I'm taking a second look at this company now. Share price going sideways, expanding volume. In fact, if you have a look at the weekly chart, you can definitely see that expanding volume. The last 3 weeks, each week has been higher volume than the previous one. I am going to put this company into my watch list just to see what happens moving forward. I'm not even thinking about taking a position, but if volume precedes price action, there is a possibility that the share price of this company will go on a rally soonish rather than laterish. So keep an eye on that. The next one is Xpon. I did not have a look at what this company does, Says technologies in the name. So I do notice that the revenue has been decreased in the last 3.5 years. That's not a good sign. Operates as a software company. Well, there you go. Provides marketing technology and cloud business services and software solutions to corporate and mid-tier enterprises. Doesn't really tell me what they do. Oh, it tells me a little bit later, further down. Company specializes in accelerating the modernization of marketing through digital experiences. Anyway, whatever. The main thing about this is the volume, expanding volume. And this has been a little bit longer. This volume expansion has been a little bit longer than what we saw with Control Bionics. Share price has done nothing though. So it seems to me someone is building a position at these levels because the volume remains high. Really good volume coming in for Xpon Technologies. Share price has done nothing though. And just have a look at the weekly chart. Look at that volume. So really good volume coming in the last, we'll say 5 or 6 weeks. So definitely something is happening for this company. But when you look at the weekly chart, share price, as soon as it listed on the ASX back in 2022, or was that late 2021? December 2021, has just fallen, continued to fall. Has fallen from the mid-20s all the way down to, what's the share price now? 1.2 cents. Market cap of this company is 4.1 million. So if this company shows any sort of life, any sort of inkling that it's reaching profitability at a market cap of 4.11 million, I could understand why maybe some institutions, some retail investors are sort of getting in early because maybe this is the low. So I'm going to keep a very close eye on Xpon just to see if those who are buying now on a fairly good volume, if they are seeing something that I'm not seeing just yet with Xpon Technologies. And the last one is Energy Technologies. I actually did have a look at this company, and I completely forget what they do. Energy Technologies. Maybe looking at what they do in TradingView would tell me. Seeks to develop business opportunities in niche sectors of the electric power industry. Through its subsidiaries, the firm engages in the manufacturing of low voltage copper insulated cables. Now I know. Yeah, so it's a manufacturing company in the sort of power infrastructure, that sort of area. And again, this is another example of really big volume coming in and nothing much happening with the share price. Really low volume last few years, all of a sudden really big volume coming in for Energy Technologies. Market cap of this company is about $15 million. And if you have a look at the weekly chart, you can see that volume, like 5 weeks in a row, really big volume. There might be a reason behind that, but again, this is probably another reason why you have to do a little bit of research. What's causing this volume? But this could be an example of, again, volume preceding price action. I have read that now a few times. So another company I'm putting into my watch lists. And 2 companies to go, CSL and Mayne Pharma. And I put these companies in for different reasons. One, really negative, and one, starting to look interesting. The one that's looking interesting is CSL. I think there is probably an argument. This CSL is looking quite good value at current levels. So I saw someone release something the other day. Forward P ratio of CSL right now is 26. That's low for the potential growth of this company in the next 5-10 years. One of the reasons this company is starting to look good value is when you look at the weekly chart, share price of this company has done nothing for about 4 years. Actually, almost 4.5 years. Share price of this company has done nothing. So the company has grown in that 4 years. So the company has grown, financially expanded, but the multiples have contracted. That's why this company is starting to look attractive at current levels. Not only that, if you look at the daily chart, you're starting to see a possibility of an uptrend trying to develop. Yeah, uptrend trying to develop. So I do have a long-term position in this company. I've also traded this company in the past, and I am thinking of adding to my position in CSL for various reasons. And one of the reasons is the chart. And I think there is some value in this company right now. Now, on the flip side, I would consider CSL to be one of the highest quality companies on the ASX. One of the lowest quality companies, I would consider the next company. That's Mayne Pharma. Mayne Pharma has been a capital destroyer. I would assume, over the past 10 years. So let's have a look at the monthly chart. Oh yeah, well, actually over the last 8 years. Share price of this company got a high of $42. I don't think it was $42. This company must have done a share consolidation. Share price was definitely not $42. Now it's $4.72. So it has been a destroyer of capital over the past 8 years. But that's not the reason I want to discuss this. Cody, things were starting to look good for Mayne Pharma at the start of 2024. Share price looked like it was in an uptrend. Things were moving forward for this company. Things were looking good. They actually did release a few good announcements. And then they released an announcement on the 14th of May. Market didn't like it. And I thought, oh, it doesn't look that bad. And I saw the share price get to $6.40, which was a support level for this company. And I went, oh, we'll take a trading position expecting a bounce. There was a bounce, a very small bounce the next day, but then the selling came in. The next day, the share price actually fell 8.4%. And share price has continued to fall. I got out of that trade fairly quickly as soon as it was fairly obvious that that support level had then become resistance. The reason it became resistance is pretty obvious. The day it fell through, the 2 days after it fell through that support level, it tested that level and then it fell away. So that test was sort of unsuccessful. Really low volume came in on that day. Really low volume. That's a bad sign as well. You want to see big volume coming in as it tested, but we didn't see it. So this is another example of company releasing something negative. I didn't think it was that negative. The market thought differently. Share price has absolutely collapsed since then. In fact, I sold my shares at a small loss, granted, at about, was it $6.20? Share price now $4.72. So another example of just because the share price might be lower from when you bought and you might take a loss, that could be a good thing, taking a loss at that point, because I'm so glad I sold out of Mayne Pharma at that point, because they've released something that's negative. The market thinks it's negative, and the share price the chart is looking ugly right now. Wouldn't be surprised to see a bounce here. And I would say, if you look at RSI, this company has been oversold for a few weeks. Let's have a look. Well, not the symbol, indicator. Yep, it's been oversold since the 20th of May, so the last few weeks. So if you just saw that and went, oh, this is oversold, I'm going to buy some shares, yeah, you've done badly. So even though it is oversold, and I do expect a bounce when it is oversold, we haven't seen that bounce just yet. We have seen a bounce, but it was weak. On the 24th of May, there was a bounce. It was weak. Okay, that is all I have for today's video. Hope you've enjoyed it. Hope some of the ideas I've shared with you have come to fruition. So have you liked any of these ideas? Or maybe none of them. That's okay. And the last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.